Bienvenidos todos en el siguiente episodio de MadBitcoin Business. Estoy de nuevo con Alberto Mera. Hoy tenemos un invitado que creo que todos conocen como Croesus y que es un autor de un scorecard sobre los global assets más famosos del mundo, utilizado por el mismísimo Michael Saylor. Tuvimos una conversación increíble. Jesse es un todo referente en todo el conocimiento sobre Bitcoin y últimamente también se incorporó en una de las empresas que se convirtió en Bitcoin Treasury Company, The Smarter Web Company, y de verdad que aprendimos un montón.
Sí, la de Smarter Web en particular tiene una historia muy, muy interesante que Jesse comparte y me pareció que era un buen punto sacar esa colación. También, por supuesto, la tabla esa famosa de los activos y cuánto pesa Bitcoin en el total de activos, una tabla que yo mismo he usado bastantes veces en los podcasts y es que es muy ilustrativa. Entonces, encontrar un poco la idea de dónde viene también ha sido muy, muy interesante. Así que nada, pues la verdad es que la conversación merece la pena. Ha sido, no está mal porque, claro, es hablar mal de los otros, pero ha sido de las mejores que hemos tenido, yo diría. Así que, a ver, yo es que tengo que tener una opinión y la verdad es que la capacidad que ha tenido de ilustrar sobre la cuestión de las tesoreras en particular me ha parecido muy, muy buena. Así que, nada, pues vamos con Jesse, que ha estado muy bien.
Vamos con Jesse.
If you look at the histogram, the distribution of days in terms of, for Bitcoin, in terms of percent change on that day, you get 10, 20 days a year where you have a plus 5% or more day. And if you get rid of that cluster, it's a net neutral. That the histogram nets out to nothing. So all the returns for Bitcoin come from just a handful of days. But that means that the volatile days are good days. The volatility skews to the upside. And that means that it's good volatility. It helps your portfolio to have that kind of volatility. In traditional markets, in traditional equities, and with bonds, the volatile days skew to the downside. So a volatile day tends to be a crash. And so you're afraid of volatile days. And it's the total inverse with Bitcoin.
Hello, everyone. I'm so thrilled to announce that today our guest in the new episode of MadBitcoin Business with Alberto Mera is Jesse Myers, the Croesus itself, the man behind the famous presentation that every Bitcoiner is using now, and everyone knows how much of assets are there in the world. Thank you so much for coming, Jesse. It's such a huge pleasure to have you here.
Thank you for having me. Thank you for that overly kind introduction, and I'm honored to be, I believe, your fifth guest. So really happy to be here.
Yeah, thank you for being with us. It's a very interesting image, that one that you created, and I think we're gonna start talking about that one. I think Aldona has a question prepared about that, but I just wanted to say before we get started with that the way you framed the amount of assets in the world and the way you presented it is very simple, but it's very illustrative, and I think it helps convey a difficult idea in a very simple way, and I believe these things are very important. And especially for Bitcoin, because Bitcoin is a difficult asset to understand. So every time there's something or some new way, to present a difficult concept in a simple way, I believe it's very interesting. It's amazing for content creators like me, for instance. I can talk about that for maybe 1 month. So that's always very helpful when something like this comes up. Recently, you've probably heard of the IPO of Bitcoin. It's been doing the rounds, this idea of why Bitcoin is not going up this year because the whales and the OGs are selling. So this way of presenting it as the IPO of Bitcoin is again one simple idea, one simple way to present a difficult idea. So it's a good job that you did there. So yeah, just thank you for that. And Aldona, now you can carry on with your question.
And so that everyone knows that we're talking about, I prepared some screenshots so that everyone knows. Just a reminder. For sure, everyone knows it, but just a reminder. If you let me, I will show it here, and let's start from it. This is in Spanish because this podcast goes to the Spanish audience too. But this is your famous, my version, but your famous presentation where you were indicating that
We are now globally having 900 trillion of the assets, and Bitcoin is a baby, still a baby, that covers only 2 trillion until now. However, in some of your interviews, you are mentioning that Bitcoin will come up to at least 200 trillions, and that Bitcoin price will be by then of $10 million per Bitcoin. How did you make this calculation?
Yeah, so the idea was simple, and thank you, Alberto. That I guess that's why this chart has taken on quite a life of its own, because it does simplify what's a hard thing to quantify, which is where is Bitcoin's place in the global asset landscape, and how small is it relative to everything else. So I'm a management consultant from the past. I was at Bain & Company for 4 years, and one of the skill sets you learn is how to size markets. And that involves making estimates, putting a finger in the air at times, and triangulating between various data points to find something that's sensible. And a major exercise you often do is sizing the market opportunity for a company to expand into, a new product line or a new geography. And it's all about gathering data points and triangulating what's possible. The starting point of that is, how big is the market? And then the question becomes, like, how much of the market can you win? So in Bitcoin, that was something that I was thinking about when I stumbled down the Bitcoin rabbit hole. And there wasn't really any good analysis out there using that kind of approach for how big is the market and how much of it can Bitcoin win as an asset. And so I set about, trying to think through that. And I found that the starting point was needing to know how much value is out there. And there wasn't actually like a clear singular view of that anywhere, which was stunned me, frankly, that nobody had put together like a singular view of, here's where all the value in the world sits and how much it totals up to. All analysis that I came across is about some subset, some little market, some huge markets, right? But nobody had taken the fully zoomed out look and said, here's how much value there is. And that's important for Bitcoin, because Bitcoin is digital value, is digital scarcity. It's the perfection of a store of value asset. And therefore, it's competing with any other asset that you park value in. Because any investor is constantly interested in, where should I be holding my value such that it propagates into the future with the lowest risk and or with the greatest growth in purchasing power. Those are the things that people are trying to solve for in their portfolios. And that means that, if Bitcoin is the best store of value asset with the lowest risks in some ways and the highest growth in some ways, it is potentially appealing to anybody who's trying to propagate value into the future and grow their purchasing power over time. So what's in scope for Bitcoin is everything. It's all value is in scope, and nobody had kind of pointed that out. So this chart was the starting point of my analysis that I put together in a piece called Bitcoin's Full Potential Valuation that I put out a few years ago. And, the next step after establishing here's how much value is in each of these asset class buckets was then to assess, okay, for bonds, what percent of market share do I think Bitcoin will eventually siphon away? How much will it win from bonds? And then that's an exercise, this is a subjective exercise that anybody can go through on their own to say, okay, bonds are future promises for fiat. It's a contract for future fiat cash flows. And given the context of what I think is happening with global M2 money supply growth rates being greater than the stated inflation rate, and I think that M2 money supply growth rate is the true inflation rate. And if a bond is delivering less than the M2 supply growth rate, then it's actually losing value. It's destroying value for bondholders. I think that's a big part of what's going on in the global asset landscape right now. And I think people are slowly waking up to that. And so I think that there's going to be an exodus from bonds. And I think that Bitcoin's the best place for that kind of capital, because Bitcoin has the properties that bondholders seek, which is reliable propagation of value into the future that delivers some sort of return. And Bitcoin achieves that because it has increasing scarcity of new supply issuance, which is very different from sort of nominal interest rate returns. But at any rate, I think that Bitcoin serves the proposition of bonds better. And so I think that Bitcoin will steal capital away from bonds over the coming decades. And I put a number to that. I think I put 30%. Bitcoin's going to steal 30% of bond capital. And I did that for each of those asset buckets. And then when I summed it all up, it came out to $200 trillion, or 20% of global asset value. And that would mean $10 million per Bitcoin in today's dollars. And that kind of surprised me, because it sounds, especially a few years ago, that sounded so crazy. Back when Bitcoin was at like $10,000 per coin, that sounded pretty crazy. And now one person in particular read that piece and found it very valuable, and that was Michael Saylor. And he sent me some nice messages about that. And then he incorporated that into his work, into how he was viewing Bitcoin and the opportunity for Bitcoin and the opportunity for his company as a Bitcoin Treasury company. And yeah, so he started including that slide as the jumping off point in his presentations, and then built his own Bitcoin 24 valuation model for how valuable he thinks Bitcoin is going to be 20 years from now per coin, which is basically the same. It's the same methodology, the same framework of how to think about the opportunity for Bitcoin. And he just inputted his own assumptions, which is what I want everybody to do. And so because of that, this chart and that piece has become surprisingly integrated into how people think about Bitcoin and the opportunity for Bitcoin. I suppose it did crystallize the setup for Bitcoin as an asset in the global asset landscape and where it's hopefully going.
Yeah, because I'd say that in the past few years, the last 2-3 years, I'd say Bitcoin has become more an asset to have in portfolios than whatever Bitcoin was mainly before. Like when it was a money for against censorship and all that, which still is. But the main narrative is now about Bitcoin as an asset in the portfolios. So now when you start to think about Bitcoin in these terms, you're thinking, okay, if I have Bitcoin in my portfolio, I need to make some room for it, right? And in my portfolio, I may have bonds, equity, or whatever else, gold. So what am I going to take out? What am I going to sell in order to get a Bitcoin in? And I think that's why it's very interesting. And what you mentioned about siphoning these assets or money from these assets into Bitcoin, I think is a good segue into treasuries, because as you said, Saylor took this idea to explain what he's doing, because in a way, I mean, it works perfectly. It's like a glove to a hand, because you have strategy and you have, of course, many others. We're going to be talking about Smarter Web, of course, as well. But the idea of these companies is that they offer Bitcoin as equity, they offer Bitcoin as bonds, they offer Bitcoin in different kind of wraps that represent some of these other buckets. But at the end, there's Bitcoin. So it's a very interesting way to present it using your image, and I understand why Saylor found that, and I was like, okay, I'm going to take this for me because it is very, very useful. But talking about this and making the segue to treasury companies, of course, you joined Smarter Web somewhere like maybe 3-4 months ago. I don't think it was much earlier.
Yeah.
Can you explain your perspective on what you've lived and what you've gone through with Smarter Web? Because Smarter Web was one of the craziest stories when it comes to treasury companies. I remember talking about what was happening to Smarter Web at some point in a cafe to an investor. And the guy was like, he wasn't believing it. He had to take the phone out and check it out, because he was like, this is impossible. So it was something crazy, completely crazy. And I want you maybe to share what made it so crazy, because we have other examples, but they weren't as explosive, I think, as Smarter Web.
Yeah, it's a great question. I haven't really thought about, in this way. So this will be interesting to go through. But I think that there's demand for Bitcoin treasury companies everywhere in the world. And, we've seen it with Strategy in the US starting 5 years ago. And then a year and a half ago, this failing hotel company in Japan decided, we'll try this model. Nobody's done it from a position of, starting from scratch, basically. And it worked, and it worked incredibly well. And Metaplanet was the best performing public equity in the world in 2024. And that got everybody's attention. And then that was really what generated the craze for trying to do your own Bitcoin treasury company. And so many companies have popped up in the last year in particular following Metaplanet's success. And that demand is there in every capital market in the world. And I think that in the UK, there's, for a variety of reasons, the UK is a particularly well-suited capital market for there to be demand for a Bitcoin treasury company. UK equities have been lackluster, to say the least. I think the sort of the CAGR for, FTSE 100 companies has been like 5%. So terrible growth, not much volatility. And investors are looking for volatility. And then investors, retail and institutional, have not had access to Bitcoin products. The FCA has not allowed retirement account capital and institutional capital to access Bitcoin for its entire history. So there's been a lot of latent demand for participating in Bitcoin, getting exposure to Bitcoin, and there's a lot of demand for an exciting equity that can help your retirement account or help the performance of your portfolio. And it was hard to set it up in the UK. Founder and CEO Andrew Webley, he had been running his small web design business for 15 years, the Smarter Web company, got into Bitcoin, owned MicroStrategy 5 years ago, thought it was the greatest thing ever, wanted that to happen in the UK, wanted there to be a UK version that he could invest in more easily and support a UK company. And it didn't exist. And so after years of waiting for that, he finally decided, okay, I'll take my little company public and I will do it and follow the Metaplanet playbook. And he had to blaze a trail to navigate how to do it from a regulatory perspective, because it is a little tricky in the UK to do it. And I think that once that IPO happened, we saw how much demand there has been for a Bitcoin treasury company in the UK. And the Smarter Web company IPO'd at a few £1 million of market cap, and within 2 months had crossed £1 billion of market cap and went from 0 Bitcoin to today we have 2664 Bitcoin on the balance sheet. And of course, so as soon as Smarter Web popped up, like 25 other Bitcoin treasury companies announced that they would do the same in the UK. To date, none have gotten a tenth as much Bitcoin on their balance sheets. And most of them had never bought any Bitcoin, actually. They never actually got to that point. But yeah, I think there was an explosion of interest globally in the model of a Bitcoin treasury company. Everybody wanted access to it. Everybody wanted to be a part of the next Metaplanet. And I think we've seen the latest chapter in the maturation of Bitcoin as an asset and the first chapter of Bitcoin treasury companies internationally. And that has been kind of the last year of building enthusiasm about the model, crescendoing into a bit of a mania in Q2 2025. And through the summer, the tide has gone out. So, and I think that was probably necessary because there was too much supply. There were too many Bitcoin treasury companies that piled in to do pipe deals, raise a bunch of money by offering institutional capital discounts with no track record of delivering Bitcoin yield. And guess what? Those institutions who got the discounts, they exit, and collect their discount as a profit. And the fallout from that is what we've been living through, I think, the last 3-4 months. And that's brutal for shareholders. But the important part, from my perspective, the important part is that there are some Bitcoin treasury companies who have continued to execute and continued to make their fundamentals better and better. And Smarter Web is one of those companies. And, we're fortunate to have generated enough support, enough critical mass of market cap, and enough options that we can continue to deliver shareholder value despite the tougher conditions. When frankly, most other Bitcoin treasury companies their flywheels have stopped and probably won't restart. So, in that sense, it's been important for us to be the flagship UK Bitcoin treasury company with the greatest, global investor support and demand. And that's allowed us to, on a relative basis, be in a stronger position relative to other Bitcoin treasury companies in the UK. than we were 4 months ago.
I think that this is like the natural part of the cycle, no? When there is something that new as the Bitcoin treasury companies that is attracting so much of the attention. And as you say, not all the companies will be following the playbook as strategy did. Not all of them may be doing it for the conviction, but more for the opportunistic values. They are just seeing it as the another hype, maybe without profoundly understanding what they are being into. However, for the future, for sure we're going to see that there will be like less but bigger. However, you said in one of the interviews that although people think that the Bitcoin adoption is like getting greater and greater and largest all over the world, finally the numbers don't lie. If we see at the people, like apart from the public companies or private companies collecting Bitcoin to their treasuries, but if we even see for the individuals that are having more than 0.1 Bitcoins in their wallet, there are not more than 4 million right now on chain. Some people say now it's like 200 million and we are going to get to 10% of the adoption in 5-10 years. It was not that, and we can see that it's going much slower than maybe some were hoping for. So what are your thoughts on that? How do you think where this adoption will end, or it will not, but it will be slower than many expect? How we can bring more people to Bitcoin? Because we know that Bitcoin for sure will not be covering like 100% of this 900 trillion of the assets. There will be always people wanting to buy other things than Bitcoin. So how we can attract more people, both individuals and public companies, to Bitcoin?
Yeah, wow, that's cool. What you're referencing is sort of older work of mine that I haven't revisited in some time. So this is interesting.
She's a stalker.
Yeah, yeah, yeah. You did your research. That's fantastic. You're right that I think we are still at about 4 million addresses on chain that have 0.1 or Bitcoin or more in them. And the implication there is that there's at most 4 million people who have secured 0.1 Bitcoin or more of Bitcoin savings in an address that they control, which is not a ton, right? That's a tiny amount of a tiny percentage of the population. And you're right, it's people talk about hundreds of millions of people have adopted Bitcoin, and yet the on-chain proof is that very few people have taken that step to control on-chain assets, on-chain Bitcoin in their own address, and that's a shame. And it's interesting to think about it in, I haven't thought about that in a couple of years. And what has happened over the last few years has been adoption through other means, right? And it's like less cypherpunk, less ideal adoption of Bitcoin as an asset, but it's frankly the maturation of Bitcoin as an asset and how you start to get more into the mainstream, I think. And probably the biggest story there is the securitization of Bitcoin exposure. As in terms of ETFs and especially in terms of Bitcoin treasury companies. I think the reality of it is that the easiest way for people to adopt Bitcoin is by holding a stock in their stock portfolio that is a strong performer and gives them a little bit of exposure to Bitcoin without them ever learning about Bitcoin's properties or how to control Bitcoin on chain. It's a shortcut, and that comes with trade-offs, right? Like you have greater distribution of Bitcoin ownership, but you haven't educated those people about the importance of self-custody, and they haven't taken the personal responsibility of not your keys, not your coins. But it's a step, right? And I think my hope is that as Bitcoin becomes a more and more important asset, as Alberto pointed out earlier, that Bitcoin is I think 5 years ago Bitcoin was really just still a cypherpunk savings vehicle. And the thing about it as a savings vehicle is it's the best, in my view, it's the best savings technology in the world for individuals, but that's true for businesses too, right? And Bitcoin maturing as an asset means becoming the savings vehicle for businesses, which means being a treasury asset. And then, Bitcoin treasury companies flow out of that. So it's interesting. And I guess the other sort of mental image that comes to mind is the sort of Trojan horse concept in Bitcoin of, Bitcoin Bitcoin is a Trojan horse for the financial system. We are bringing this Trojan horse to the gates of TradFi, and it's being welcomed in because it delivers superior performance, and can make stocks outperform. And everybody wants that, and everybody welcomes that in. But the reality of Bitcoin is that it's also immutable, uncensorable financial freedom, and that comes with it, and that's a great thing. So I want Bitcoin to be embraced by global finance, but I also want Bitcoin to be what Bitcoin is, which is money that nobody can stop, and freedom, as a result of that. So it is interesting to think about, the trends of adoption of Bitcoin right now, and it has taken a bit of a turn, in the sense that right now it's all about orange pilling finance by telling, by introducing these new models like Bitcoin Treasury companies to equity markets and saying, look how great this is. Here's a company whose treasury is made up of an asset that grows at 30% a year, and you can add more and more to that treasury and grow Bitcoin per share and add a ton of volatility and outperform everything else. Isn't that something that you want? And I think that's, driving the narrative right now and winning the hearts and minds of important people, including politicians and, like the Trump family even, because they see performance and I'll take it.
Yeah. Do you still sustain that Bitcoin should be more used as the saving vehicle and less as the investment instrument? I heard in one of your interviews that you even called investing and like playing with Bitcoin that is like pure gambling and you don't like it. Many times when I speak to my friends and my colleagues, when they say, oh, I buy and I sell, and I'm always like losing or winning. And when I tell them that you buy Bitcoin, but you never sell, they don't understand that. So if you could like very shortly tell us why we should not sell our Bitcoin, why Bitcoin is not for gambling, why Bitcoin should not be used maybe that much for this investment of buy and sell, like very small movements.
Yes, absolutely. I don't think people should ever try to trade Bitcoin, because everybody who's trading Bitcoin is hoping to grow their Bitcoin over time, right? They want to sell high and buy low, but you're going up against Wall Street pros whenever you do that, and it's a losing proposition, because over time Bitcoin goes up. As global adoption plays out, as its increasing scarcity plays out. So my mental model is, think of Bitcoin as growing at 30% a year. And anytime that you sell and you try to buy back lower, you're hoping that it goes against that trend. Good luck, first of all, right? Like that's a losing proposition right there. And then, if you're trying to take leverage or something like that, well, the market has a way of screwing over people who think they're going to, outsmart Wall Street, basically, by trading. And the other mental image that comes to mind is Bitcoin is a game of musical chairs. I don't know if you're familiar with that game. Okay. It's a game of musical chairs where every round you have the option of just staying in your chair, keeping your seat. And every round they add a bunch more people, but they don't add any more chairs. So what's your, if you think of that game theoretically, what's your best strategy there? It's to just keep your seat. Just hold on to what you already have because you were there early, and let everybody else bid up the value of your seat without you, trying to scramble to hoard more. So I think everybody that I know who's ever tried to trade Bitcoin has ended up with less Bitcoin, because you're going against those massive forces that work against you. And I think the best way to view Bitcoin is as a savings technology, the best savings technology in history, where because of its endogenous properties, it grows in purchasing power over time. Bitcoin that you save today, it's like a bank account that grows 30% a year in value. And mind you, no asset class out there grows at 30% a year or more in value. Venture capital is the riskiest kind of capital investment you can make. And that historically has returned 24% a year, but you have to lock it up for 10 years and you need to be in the top 10% of venture capital funds to get any positive returns. Otherwise, you're treading water or losing value. So, that's how much risk you need to take to even get close to Bitcoin as a savings vehicle, but you can just hold Bitcoin. Like that's the best way, in my view, to engage with Bitcoin.
Yeah, the savings idea is one that also helped me understand the beginning of the Treasury company movement. I mean, there was, and you probably noticed, but there was like a division in the Bitcoiner realm. People that are against, the people that are for these companies, which I mean usually happens with the Bitcoiners. But what I found interesting is that, I mean, at the end of the day, it was expected, because a company buying Bitcoin for themselves is the same that any Bitcoiner is trying to do for themselves, right? But the thing is that the companies have the possibility of issuing stock, and have the possibilities of creating other financial assets that they can use to capitalize themselves and then buy more Bitcoin. So it was something that was going to happen, and this takes me to the idea that you mentioned before about these treasury companies doing this, to capitalize themselves and then buying Bitcoin, and the fact that you and Smarter Web in particular managed to get this critical size when you were trading at these multiples that you managed to do. Of course, this wasn't the case for all of the companies, not in the UK or not in other countries. Not all of these treasury companies managed to do that, and even the ones that did maybe weren't fast enough to get enough capital, to raise enough capital to then put it to work on Bitcoin. So what is for you the future of treasury companies? Because there is, of course, the ones that are big enough that maybe in terms of dollars today may not be big enough, but potentially in 3, 4, 5 years they will be big enough to do different things like issuing maybe preferred stock and stuff like that. But there are the ones that are somewhat big, like Smarter Web and I think Capital B are in the same size. They are big, they're not massive like Strategy. They're not super big, let's say like MetaPlanet, but they're big enough to do things. And then there's a majority of them that are like very small. Like the one in Spain we have Banadi, which is like it's got 100 and something, and we have I think plenty of those that have around 100 or 200. So what do you think is the deal for these companies, or what do you think is the future for treasury companies depending on their size?
Yeah, I think I think that 90% of treasury companies are in trouble. Won't survive, won't thrive, and that's mostly just because there's been so many that popped up that as Aldona pointed out, are potentially just trying to grab the moment, seize the opportunity, and are not doing it for the right reasons or have the wrong incentives. But at any rate, I think 90% of Bitcoin treasury companies fail or get consolidated or something like that. But I am extremely bullish about the 10% that survive and thrive. I think that in every capital market, basically every country that has its own regulatory framework and has a significant amount of capital will have a leading Bitcoin treasury company that's the homegrown hero, the local champion, the company that is integrated into the regulatory framework of that country. So in Spain, and maybe it's that company, maybe it's somebody else who comes in and does it better, because I think there's probably a bit more risk the smaller you are that somebody else could catch up to you. The larger you are, the harder it is to catch up to anybody. I think it's probably MetaPlanet has probably now passed that place where somebody can catch them. I think in Smarter Web's case, we're in between, where it's de-risked in some ways, but it's still possible for somebody to catch us. But we're in pole position. Anyway, I think the reality of Bitcoin treasury companies is that they take Bitcoin's volatility and amplify it through the model. I mean, because the balance sheet is made up of Bitcoin, but then you layer on top of that the capacity of the company given market conditions to add Bitcoin per share, and that's volatile too. So you're multiplying the volatility, and right now Smarter Web trades at 150% volatility, and Bitcoin trades at like 35% vol. And so I think that right there tells you a lot about the asset, about Smarter Web as a investment. It is a higher vol Bitcoin product than you can get with just Bitcoin at this point. And in many ways, it reminds me of like Bitcoin in 2013. I think that's kind of the volatility you would have seen back in 2013 for Bitcoin. And
can I follow up on this just a second? Because of course the volatility story is very important for investors. And also, you mentioned in the UK, there's not much. I don't think in Spain there's a lot of volatility either. So, what is the incentive for the investors, or where do they see the value in this volatility? Because of course, some of these companies, and I'd say, well, I think the majority of them have gone down in value over the past 2-3 months with this deleveraging. But of course, this will not be the case forever. But the volatility is still there. So, what is the when you go and talk to investors about the potential future and the value of the stock for them as investors, how do you sell the volatility idea for them?
Volatility is vitality, as Michael Saylor says.
Yeah, that's right.
And that's it.
Right.
They say that, and that's it, and they leave the room.
Yeah, it's funny that nobody's ever asked this question, like in our sort of investor talks before. And I wish they would, because the reality of it is that in TradFi, in traditional markets, volatility is negative. Volatility is scary because, and some great work by Mark Connors on this point for Bitcoin. If you look at the histogram, the distribution of days for Bitcoin in terms of percent change on that day, right? It's like a bell curve, but there's a little cluster that skews way to the positive. You get 10, 20 days a year where you have a plus 5% or more day. And if you get rid of that cluster, it's
Flat. Yeah.
it's a net neutral, right? Like the histogram nets out to nothing. But so all the returns for Bitcoin come from just a handful of days. But that means that the volatile days are good days. The volatility skews to the upside. And that means that it's good volatility. It helps your portfolio to have that kind of volatility. In traditional markets, in traditional equities, and with bonds, the volatile days skew to the downside. So like a volatile day tends to be a crash. And so you're afraid of volatile days. And it's the total inverse with Bitcoin. So Bitcoin brings good vol to a portfolio. And in my view, a Bitcoin Treasury company amplifies that good vol, about the literal numbers there. But yeah, and so taking stock of the current moment for smarter web, there's been a global sector-wide compression of MNAVs down to 1 and below 1, and smarter web has been a part of that. And we're currently at a 0.9 MNAV, which means that for a 10% discount, you can acquire Bitcoin ownership by buying Smarter Web's shares and get the same amount of Bitcoin ownership as if you bought Bitcoin, but for 10% cheaper. So that's where we've gotten to at this point in time now. And I think the reality of like, why are we at sub 1 MNAV? It's the momentum of the market, the trend. I think, having talked to a variety of larger investors who are having to deleverage or are electing to tax loss harvest, people are selling because they have to, even though it doesn't make sense to do so because you're now under 1x MNAV. So, that's the byproduct of volatility. That's how volatility manifests, I think, in an asset like this. And it also creates opportunity for people who are considering an entry point, so again, the value proposition of Smarter Web at this point in time is a 10% discount on Bitcoin ownership, plus any additional Bitcoin per share that we're able to add indefinitely into the future, which is our entire focus.
Goal, yeah.
And you're getting that all for free, right? So that, that's the reality of the moment we're at. And I think we're only at that place because of the bear trend and how it has squeezed people to become irrational sellers. Sellers, in many cases, sellers who don't want to sell because they know it's irrational, but they have to. So they're forced sellers, and then you end up in the kind of place we're at right now. Looking forward, I think the dynamics that got us into this place remain. The volatility is still there, and the pendulum, I think, is going to, at some point, swing back in the other direction. For example, MicroStrategy was trading at a 0.7 MNAV in 2022, and in 2024, they were at a 4x MNAV. And that was just a function of people getting excited about Bitcoin, wanting more Bitcoin, and then getting excited about MicroStrategy because they offered compounding Bitcoin, growing your Bitcoin ownership over time. And that turned into, the pendulum swinging hard in the other direction. So I think that's going to happen again for Bitcoin treasury companies. It won't be for all of them. It'll be for the ones that survive. I think the ones that survive will be the ones that are well run, and especially the ones that are in a leadership position in their particular capital market or area of the market. You can be specialized in a certain type of Bitcoin yield. So yeah, that's my outlook going forward. It's just a question in my mind of when does that pendulum swing in the other direction.
Yeah. Yesterday, Michael Serra had a speech in Naples. I don't know whether you had a chance to listen to it last night. Well, he was precisely talking about the volatility that we've been told that all the universities, that all the traditional ones, traditional finance, that volatility is something bad, which is not. So maybe we should just start to change the narrative, and maybe we should change the universities because because the times are changing, and the traditional finance, they are keep on teaching the same old story, 60-40 portfolio, volatility is bad, but the times has changed. With the digital capital, digital credit, as Michael Saylor is preaching, the things that we should look at are completely the other way around. So volatility is something that many investors should be looking for, because, as I said before, there is no vitality without the volatility. And as you said, only in the moments of the volatility for Bitcoin, this is the moment that you really win. To wrap up, for the next decades, for the next years and next decades, where do you see Bitcoin within the public sector and the private sector? You think that once this Armageddon that we are living now is over and all the lessons are learned, we can see the future that we will not be talking anymore about Bitcoin treasury companies, but we will just talk about companies, just as we stopped talking about internet companies and we just talk about companies. You think it's going to be that naturalized that we will not even think of it?
Yeah, I think that's right. I mean, I think with regard to public sector versus private sector, I have a slightly contrarian take on that. I think that governments just simply aren't set up to be able to adopt Bitcoin meaningfully, and that the private sector will drive that, will be kind of alone in driving that until there's a tipping point where you have a critical mass of people in government and voters who view Bitcoin as something that should be in portfolios. And that's probably something like 30% of people need to view it that way before you have governments that actually hold on to Bitcoin for the long term. I think there's going to be plenty of governments that acquire Bitcoin or confiscate Bitcoin, and then Bitcoin 3x's and they take profit, right? And like that's going to keep happening, I think. So I'm actually kind of bearish on the public sector until the private sector has made enough inroads into the hearts and minds of people and portfolios that Bitcoin has become de facto and it has replaced the 60-40 portfolio that you mentioned. 60-40 portfolio worked over the last 40 years because we had declining interest rates from 1980 until the mid 2000s.
Yeah.
And financial asset valuations skyrocket when you're decreasing interest rates. So that works for equities and it works for bonds. And now we are facing the reverse trend, and I don't think the fixed income market has processed the reality that they are being already inflated away, right? So you're destroying value by holding fixed income. That in 10-year U.S. Treasury bill is 4.5%, and I think the true inflation rate is like 7 or 8%. So you're losing value on the difference every year that you hold that. Yeah, I think that that's the reality of what we're living through. And, looking out 10, 20 years, I think that we're still so early in the process of this asset being normalized in culture. And I think the reality is our generation and the success of Bitcoiners in their portfolios will help influence the norms for the next generation of what do you do? Do I do a 60-40 portfolio like the baby boomers succeeded with? Or do I do a Bitcoin and equities portfolio like the millennials succeeded with. And guess what? That's more relevant looking forward, I think. So yeah, some thoughts on that.
Awesome. Well, thanks very much for being here with us, answering all these questions. I just have a very super quick one because we have to wrap up, but super quick about collateralizing Bitcoin to get some dollars to purchase more Bitcoin. What do you think about this, like in terms of like as a framework?
Yeah, it's funny that I think it's the dream of any Bitcoiner and any Bitcoin Treasury company as well to get a low enough cost of capital that it makes sense. And to date, I think the risk that you're running for individuals and the cost of capital that you're paying, in my view, has made it not make sense for individuals by and large. But I think that as Bitcoin matures as an asset, it becomes better and better collateral in the interest rates that you have to pay to borrow using your Bitcoin as collateral should drop and will drop. And that will only accelerate the process of hyper-Bitcoinization of the transition of Bitcoin to become the dominant store of value asset, because it, every point of interest rate that the cost of borrowing against Bitcoin to buy more Bitcoin drops will only unlock more buying for Bitcoin.
More dollars to buy more Bitcoin.
More dollars to buy more Bitcoin. Certainly that's what a Bitcoin Treasury company can and will do. We're already doing it. That's the entire point of the debt side of a Bitcoin Treasury company model. At the moment, Smarter Web doesn't have any debt. We're looking into it though. And it's all about getting a low enough cost of capital such that, if Bitcoin continues to grow at a 30% plus CAGR and you pay a low enough interest rate on that you are benefiting. And that's the core idea of the speculative attack that Pierre Rochard described in 2014. It's the core idea of what strategy is doing. And, believing that Bitcoin will monetize to over the next 20 years and become $10 million plus per coin over the next 20 years. And yeah, so, I think that right now it doesn't make sense for individuals in particular. It makes sense for corporations who can get a low enough cost of capital. And that's part of the investment case for a Bitcoin Treasury company, is that investors can participate in this company that can achieve a lower cost of capital than they can as an individual.
Yeah, that's great. It's also a good reference because our last guest was Pierre Rochard. So I guess people will know what you're talking about.
Well, savings technology comes from Pierre Rochard and speculative attack comes from Pierre Rochard. And I use both of those all the time. So Pierre Rochard's been very influential for me.
Yeah, he's a great guy.
And for those that are still not convinced that volatility is vitality, are there any plans from the Smarter Web company to have the same preferred stock like Stretch or Stream or the one that Strive has just launched to get the preferred stock that is paying the dividend? Are there any plans for you in the future?
Yes, we hope to grow our Bitcoin balance sheet to a size where it makes sense to launch preferred equity instruments. My view is that what Saylor has pioneered there is a better form of debt than anything you can get otherwise, mostly because the properties of that debt, you're not having to, it not being callable. You don't have to have a lump sum repayment at any point in time. And then it removes a lot of the sort of debt covenant provisions that give debt holders a lot of power. All of that's very attractive. And I think it's a better form of debt. And I think those instruments will fuel a lot of the success of Bitcoin Treasury companies at siphoning capital away from the fixed income market in particular, but also the money market, as we're now seeing with Stretch. And I think, the UK is a great place for those. And we aspire to get to that place where we can launch those. And so that's the hope.
Wonderful.
Yeah, those are great instruments. Well, thank you, Jesse. Thank you, Jesse, because this has been a very interesting conversation. Thanks.
Yeah, thank you both for having me.
Thank you so much. And we hope that we can continue live having you in our MadBitcoin Summit next year in May. Hope you can make it. I know that you've got like a lot of work to do, both professionally and personally, but really hope you can make it. So hope to see you next year in Madrid. Thank you so much.
Thank you.